Hello and welcome to the Stock Operator channel. I'm your host, Alex, and we're going to go over these crazy events in the market. Trump seems to be crashing everything with the tariff announcement, and let's dig in. If that's something you're into, stick around. All right, here we go. So this is a look at the S&P 500, ticker symbol SPY, and yeah, I think on Friday or no, last Wednesday, I was saying we were going to bounce. Woo! Yeah, we didn't bounce. We actually went down. Let's see. I mean, I think we went as low as like 16-ish% in the last like 3 days. So that's a pretty substantial decline. And I had some of these targets on the S&P 500 saying that this is the lowest it can go. How am I basing that? I'm basically basing it off of this right here, the distance from this moving average, the yearly moving average. And yeah, if we take a look, pretty much at the end of a serious bear market. I mean, if you started buying in like right here, maybe it went down 5% more from here, but if you're buying 10% below the 1 year moving average, you're within here, let me see, you're basically, it's a good time to buy, unless some serious stuff happens. I think back in COVID, we had some even more, but I mean, unless this is COVID, like I kind of just wrote it as this is the lowest it can go. So yeah, I mean, we kind of bounced off of that level, and let's see what can happen. I mean, it's kind of unfortunate that one guy is kind of driving all of this, seeming to be very aggressive on resolving this. But hey, what are you gonna do? You can only just maybe what we're gonna do is, if we get a bounce here, we might reduce some risk, because there's a lot of very interesting things happening, at least in my diversified portfolio. I'll show you guys what's going on. But bonds are supposed to be kind of the hedge on the account, and bonds are going down. So yeah, let's dig into the market monitor and then go from there. Okay, so here's what it looks like. Yeah, we're at 84 stocks, 84% in stage 4. So basically every stock is in a downtrend now. It's the crash. Yeah, I mean, let's see. We were down 0.4 today, but the range was 0.5. So that's not bad. I mean, but maybe we sell off tomorrow a little bit. Let's just see, moving onward. So the put call ratio declined a little bit, but the VIX went up. I mean, listen, the VIX is at 47. I mean, you can't bet to the downside here. It's too late. So, you just got to hope that if the bounce comes, it's a substantial bounce. That's the last thing I'm kind of, banking on, is that it's going to be a substantial bounce. If it's not a substantial bounce, like in here, when we had this 28 VIX and the bounce was not that substantial, and the VIX went back to 17 right here, that spells a lot of trouble. One mistake that I made was I had some puts that I had sold, and I got out of it. It was a nice profit. It was a nice trade, but I should have bought puts just to hedge against this day. That was a mistake. Hey, you learn from your mistakes. But this, we should see a pretty substantial bounce, or we just keep crashing. But if we do get the bounce and it's not that strong, that's something to keep in mind. Okay, so 20%. Yeah, we're approaching 200 stocks, a little bit less stocks in 20% bearish. So that's good. That means it's slowing down. Not that many lower lows, some higher highs. That's good. Yeah, midday, 900 stocks that are below the 45-day Bollinger Band. That's just a massive number. 45. So it's kind of mixed too. It's like, wow, 400 and only 42. And short-term momentum down is at 370. These are pretty extreme numbers. And now the TD buy is at 1,000. So we're getting there. And 12%. Yeah. Well, if we go back to COVID, if we look here, just give me 1 second. If we go back to COVID, we bottomed at 2,000 stocks. So, you know, are we going to do that again? Not sure. I can even look at the up days. You know, right here, when we had this up day of 0.2% in COVID, that was close to the bottom. We did go down a little bit lower after that. But, you know, it kind of seems like one of those days, but it wasn't, you know, I mean, I guess, yeah, the day that it only went up 0.2% is when it bottomed. So, you know, could we be in for that day? Or could it be just the beginning? I don't know. Yeah, it's very, very interesting what's going on here. Yeah, so that's that. Yeah, I'd like to show you guys something. Let's go back here. Yeah, I mean, listen, I wouldn't be that worried about the market if it was just this. But if we go over to some of these, let me see here. If we go over to some of these stocks I have on the income side, there's some big moves happening. Like, let's see here. Yeah, like these CLO funds are not doing so well. Mortgage REITs are not doing so well. Some of these, you know, higher risk income funds are kind of blowing up here. It's not just like, look at this. This thing was just a steady grinder. And I mean, down 25% in 2 days. You know, a high yield is blowing up. A lot of these BDCs are blowing up. MBSs are blowing up. Preferred shares are blowing up. You know, real estate is blowing up. And then this is the craziest thing, is that intermediate bonds are blowing up, and long-term corporate bonds are blowing up, and treasuries are blowing up now. So it's kind of interesting because there's almost nothing safe, which typically in a diversified portfolio, you try to have something safe for a downturn. But it seems like there's no inverse relationships currently, where we have long-term bonds, intermediate-term bonds, corporates, and treasuries all going down. And then even if we look here, even gold is going down and Bitcoin's going down. The only thing that's going up now is the dollar, right? So, but then is the dollar going to go down long term because the yields are starting to go up, which means inflation is going to be higher. So this is a very, very tricky place to be in for someone who's got you know, a long-term diversified portfolio, seeing this kind of action. You know, at the moment, you got to wait. You can't take risk off like now. You know, it's just like, you know, not a good idea. But you know, in every bear market or any crash, I mean, I guess it didn't do it in COVID, but you know what my expectation was it was gonna at least test one of these moving averages one more time. But if things are really that bad and this bubble really got pricked that bad, maybe it won't, and you gotta take some risk off on the bounce. Because I mean, if we get a bounce back up to, you know, maybe 6% higher, yeah, I'm gonna probably take some risk off the table, because at the end of the day, I'm just seeing some things that are really, really sketchy. That, you know, and it all stems to this. It's pretty foolish, you know, like this giant head and shoulders in semiconductors. You know, I mean, I was saying it in another video. You know, it was like the easiest thing to see. It's the same thing as Abercrombie and Fitch, and then boom. You know, I think I was like shorting it in here earlier, and you know, it got me, shook me out. But now, you know, I mean, it's just a bearish market. So what you could do, wait for a bounce, take some off. I got to figure out what to take off. But yeah, definitely you want to have a little bit more cash on hand than I was, you know, had previously. Yeah, so that's what I'm thinking. Oh, let me see this. If I go here, let me just grab this for you guys. Yeah, let's take a look. Ooh, there it is. Yeah, so we can just go over the account really quick. I think it's down Yeah, down 14%. So, yeah, I mean, it's kind of hard to escape, the pain when the market goes down 15% in 3 days. But yeah, we're gonna. I mean, at least we're getting a little bit more yield on costs, so we'll see. But yeah, I think we're gonna keep going, get out a little bit on the bounce, maybe make a little bit more back, and see what's up next time. All right, guys, if you enjoy this content, please like and subscribe, and have a good day.